Hi, it's Dave. Welcome to a live stream. Today we're joined by Emmet Peppers for episode 267.
Killer job on interviewing lots of great people lately. I've been inundated with tons of great podcasts.
Yeah, I've been on an interview
Yeah.
spree of lately. I actually interviewed the CFO of Lemonade yesterday, so I'm just
Oh,
wrapping
okay.
that kind of thumbnails and timestamps for people, and that will go out tomorrow. It's a 2 hour deep dive
Nice.
into like the complete Lemonade financial story, the challenges, everything. Yeah, it was insane. Great interview. Yeah. How have you been, Emmett? It's been a crazy ride the past few weeks.
Yeah. Yeah, been great. And speaking of all the interviews and podcasts, I listened to a couple of my own recently. And for anyone who's listening to this on a recorded, on your recording, it seems like I speak a little slow. You might get more out of it if you listen to it at like 1.5 speed because I'm not as concise of a speaker. And I just feel like it's a good use of your time to speed me up, maybe if you're listening to me.
Yeah, no, same here with me. I watch all my YouTube videos at two times speed. I just can't stand one
Wow.
time speed. Yeah. So
Yeah.
first off, a disclaimer: everything that we talk about, in this video, as usual, is just our personal opinion. It's not financial advice. We aren't, financial advisors. We don't know your situation, so make up your own mind. I have an additional disclaimer in the video description. So that said, we've had crazy volatility. I mean, today, Tesla's up 100
Yeah.
points, I think 18.5% or stuff. How are you taking all this stuff?
Yeah, I mean, this is a great mood we're in, with Tesla up like 100 points at the moment. It's unbelievable day. I was chatting with Vincent last night, actually, who you interviewed. I loved his podcast, and I was saying, wow, those big China news numbers coming out that night, and I could see the stock going up, significantly today and tomorrow, um, and hopefully tomorrow too. We'll see. But yeah, it's quite a turnaround in one day with this volatility. Hopefully it holds through the. It looks like it's going to hold through the close. It looks like it's not going to be one of those days where we're up 2 or 3% and then finish. There's a big sell off at the close. Knock on wood. Hopefully that doesn't happen. But that would be a very bullish signal to me of this correction potentially being over if there's not a strong sell-off at the close. I think a lot of it. It seems like wasn't there some news in China? I mean, there's this growth stock sell-off was kind of happening in China too. I think to some degree, and I think there was some news overnight that the Chinese government was going to pump more money into the market, try to stop the bleeding of the sell-off on their markets, and I wonder if that somehow created, started the put a bottom on this thing. I don't know. What do you think about that?
Yeah, I mean, it seems like there's definitely something that, you know, put something in, I mean, it
Hmm.
especially for such a violent, bounce up. Yeah, I didn't, read about the whole China thing. It's possible. A lot of times some of this stuff comes out later too, exactly what's happened in the past. And then there's certain people in the know, who are doing it as
Yeah,
well. I'm curious, like 18% up or 18.5% in one day. I mean, that's crazy. I mean, people would be
yeah,
happy with 18% gain in a year. And it goes on the flip side too, that goes down 10, 15% or something in a day or more in a week. Like, like what's like, how do you handle the crazy volatility? Um, the
yeah,
past year and a half, it's been mostly up and we've had a little bit, but it's just been a trend. But nowadays, it seems like in the past few weeks, it's all over the place, and it's
hmm,
more difficult to know where this is headed. Um, how do
hmm.
you personally take, the crazy volatility?
Yeah. It's luckily you and I we experienced it a lot from 2012 to 2018, 19, right? So we've been able to weather the storm many times in the past, and this is just another one of those big storms of volatility that you didn't really expect. Now that they're part of the S&P, you thought that'd be sort of like a grounding of some sorts of the stock, but it hasn't settled down yet. Relative to the other S&P 500 companies. Even Apple, when it's down 2 or 3%, that's like big news. But on a day like that, like yesterday, Tesla's down like 8%, and it's like, whoa, what's this? I thought Tesla's supposed to be more grounded like the other tech stocks in the S&P 500. Not yet, I guess, right? And so I keep thinking like, when there's this big volatility, just like batten down the hatches. Like you're in a submarine, you're going to go for a deep dive underwater for a long time, and you don't know when you're coming back up. It could be for a while, but you're going to come back up, and you have faith that you'll survive and be okay. But you just kind of have to batten down the hatches and kind of hold your breath and be ready to wait wait a long time. Potentially, it could be years before we reach new all-time highs. I still think that it's hard to know. If the stock got so far ahead of itself that it takes years to catch up.
Yeah. Yeah, it does feel, I think, with this recent kind of just, downturn with growth stocks, it's something that I think I was kind of expecting. It's tough to know exactly what will happen, obviously when and how, but it just felt like the possibilities was there's going to be some consolidation, let's say at a certain range, for Tesla to continue to break new all-time highs. It was kind of a lower possibility, and then the other kind of bigger possibility was it could have a correction and then end up consolidating at some range, right? So it either consolidate at some range up 700 to 900 or something, or there would be a correction and then some type of consolidation at some point. It just seems like, I keep on going. I think about the whole comment you made a couple of times in some past videos of, sometimes the market does, the thing that causes the most pain, and unexpectedly. And I think right when the opening happens, when vaccines are rolling out, and it's the opportunity for people to rotate, put stuff into other, beaten down stocks. And the vulnerable place are these growth stocks, especially those that have like extremely high multiples, and those are the stocks, especially Tesla is the representative, kind of stock of that group. And those are the stocks that are hit the most. And so, I mean, in some senses, it makes complete sense that, high multiple stocks that have gotten lofty valuations are hit in kind of a changing environment, especially with the reopening of the economy. But I mean, the question is, I guess, what's next? Are we going to see just crazy volatility this whole year? Or, and a lot of it is possibilities, it's probabilities. Like there's so many things that can happen. Currently, your current thoughts just today, it could change tomorrow, obviously. But how do you see Tesla playing out for the next several months?
Yeah, I mean, a lot of it depends on the macro market, of course. Are we rotating back to growth stocks, or is it going to be back like one of these like risk on, risk off trades almost, But now it's like growth tech stocks versus, value stocks or whatever. I'm not sure if that's going to happen, but today is a nice rebound day. And if we don't sell off at the close, which I'm looking right now, it looks like we're kind of increasing. What's Tesla at now? It's like $670, up $107 still. So it's holding its $100 gain. It's pretty impressive, and I think I'm not confident Tesla's going to get to new all-time highs anytime soon, to be honest. I do think we could be in this range bound where it's like, 4 to 800, 5 to 800 or something like that for a long time. Today doesn't change that. I thought that yesterday or the day before even. And even though we have this nice rebound today, maybe we're just at the upper bound or going within this bouncing back and forth. Stocks have gotten so far ahead of themselves. It's, the businesses are growing and people are realizing it, but people are taking profits. And like you said in your tweet last week, and I know we've talked about it, like, companies, yeah, these are the future and they're going to be huge parts of our future, but the actual stock performance, the performance of the stock going up and down is hugely disconnected from the company's revenue performance going up or down, right? And the stock performance has been like that, and these companies are kind of growing like this, eventually going like that, right? And so year to year, they can seem very disconnected. And maybe for the last year, they've been so disconnected in the positive way where like Tesla's gone up 10 times, like it didn't increase revenue 10 times, doubled it or whatever, and some of that's overdue from previous years doubling over and over without the stock performing with it, right? But how much of that is from previous years catching up, or, how much now is the stock performance going to have to catch up before the company performance going to have to catch up before the stock performance then adjusts again higher, So I'm not convinced that these growth tech stocks are going to reach all new all-time highs. I hope they do. I'm positioned for that, but I'm not convinced. That's why I'm not buying like out of the money call options on these things like I used to.
Yeah. Here is Woon Lee on Twitter says, actually, Pat O'Brien says, when Tesla bounces back, how significant will it be? Will it break $1,000 per share? And I guess you're saying you're not expecting that to happen anytime soon. It could happen. I feel similar in some ways. I think on one side you do have the new stimulus package that's getting approved and released. It's going to input a lot into the economy. You have the new Biden infrastructure plan that is going to be probably another few $1 trillion. You have a possible, $7,500 tax EV credit, thing coming along. And then you have, the Fed just willing to spend whatever it takes. And so in the bigger picture, there's a lot of money going into the system, and that's going to be chasing after a limited number of assets, and so it is bullish, I think, for me, to stocks in general, the equities market in general, right? Just to have those bigger, tailwind trends. Short term, though, like as you said, it's not like Tesla 10x the revenue, or a lot of these other companies. A lot of these valuations really projected in the future and brought a lot of those future earnings into the present or present calculations. And so, it's very likely that we could be stuck, or just, actually today, like when I look at today's volatility, 100 points up, I'm not actually that excited about it. To me, it's just, well, like this stuff happens. It's going to go up. It's going to go down. And we might see a lot of this stuff, in the next several months, and it's going to be like it could be a whipsaw thing for people, they're like, oh my gosh. And then it crashes and they go, oh my gosh. And it goes up and down. And it could be emotionally draining, I think, for some people. But I think for me, I kind of, during these volatile times, I kind of look more to long-term, like say, okay, do I think Tesla under $1 trillion is undervalued? Is there significant upside, in coming years in terms of its business, its revenues, its profit, et cetera? How do you look at kind of Tesla's upside? It's next, 2 to 5 years. What excites you about it? Is there anything particular that you're latching onto, holding on to, saying I have an advantage in understanding, than other investors?
Yeah. I loved your interviews with James Duma. Is that pronouncing it right?
Dauma, yeah.
Dauma, yeah. He's super smart. He knows these, neural network stuff, the self-driving. He's got a lot of intelligent analysis on that stuff. And you guys were really talking up the bullish case on the full self-driving, which is great. And I wish it all happens, like that. And theoretically, it could happen like that. And I know ARK Investment has put their, Tasha Keeney and their team has, done a good job describing similar, outcomes economically, and the robotaxi business model and so forth. And I hope it happens like that. I'm trying to be more realistic, like the technology might be emerging right now. Like you might be able to, push that button to download that software on your car, next week, like we're hoping. But then even then, like, it might only be 99.99% safe for so long, where the regulators aren't going to approve it. They're going to like say, oh no, you have to be there and always watching it, like for years. It could be for a year, and there's competitors kind of that are not going to like it and try to smear it, and then you have like the guy James was talking about, like you have the irrational perspective people have of how dangerous plane flights are, for example, versus driving to the airport is even more dangerous, so you just have all this playing out where I feel like such a drastic change of a robo-taxi business model taking over, could take a lot longer than people expect, and so it's exciting, and I hope it plays out in the next 6 to 12 months, right? Even 1 to 2 years, but I could see it taking 5 years to kind of really play out and matriculate. Maybe like China or some other jurisdiction will approve it and be more progressive about encouraging it, as part of their economic model of their country or jurisdiction. But I'm not sure the United States will be the first, And so because of that, I'm not building that into one of the tailwinds of carrying Tesla to a huge new valuation in 2 years. I hope I'm wrong, but I'm not expecting it. I think most of the valuation the next 2 years will be based on their cars and their Tesla Energy and their actual revenue they're generating, and that's just going to be playing catch up with where the stock price is right now, and then maybe in a few years, maybe it becomes even more evident that the robo-taxi model is about to really come to fruition all over the world, and maybe at that point people will start buying it up in anticipation again, and it'll bring a new, multi-trillion-dollar valuation in like 3 to 5 years or something. I don't know. Is that what, I mean, you talked to him a lot. I didn't listen to every interview. I listened to like 2 or 3 of the 5, but I didn't listen to all of them. But what's your thoughts on that?
Yeah, I mean, I actually I agree with a lot of that in a sense where I think we're still early on in terms of understanding full self-driving and its impact with Tesla valuation. Like I've been saying, I think what's going on is people are underestimating full self-driving because it changes the product completely. The car is completely different now. It's no longer this dumb mechanical thing or car that you're driving. Now it's a robot. It's completely changing the car. The car is transformed into a robot with the most cutting edge software that knows how to drive humans safely, right? Even better than humans. And if Tesla can pull this off, this is one of the most craziest product revolutions in the history of mankind, in a sense, because when do you ever get to transform a product like that? Transportation is one of the key kind of utility products. That's why roads are so important, infrastructure. But now you're changing how everything is done, how everything is transported, how everyone is moving, and now robots are taking over that entire field. And I think on one level, it's way beyond electric cars in a sense. Electric cars are cool and it's important, etc., especially for the environment. But autonomous driving is completely different. This is a completely new product. And the second thing is, I think first thing is people have yet to completely understand and grasp how big.
To grasp it.
Yeah, how
it's
big.
So revolutionary. Exactly. It's going to be such a 180-degree change. But precisely because of that is why I think it's going to take longer for wide acceptance.
Sure. Yeah. And I think it's going to take a while for investors to understand it even, oh, whoa, this is different. A lot of times they think it's just an extra device you add onto your car to help you to drive. And it's what the heck, this isn't what's happening, it's a different game. The second thing is it's related to technology and software. So if for investors, and typically most investors aren't software engineers, so when they look at something full self-driving, what the heck is this? Is it some driving aid or, people think that it could be copied very easily, etc.
Yeah.
But the one thing with my interviews or conversations with James Dowma is what I appreciate about him is he's able to explain and dive into the ins and outs of, how this is done. The cool thing is, this is what I've been doing for over a decade in software, where in my business, when we're doing stuff, and I haven't been that involved, the past few years, but when we're doing stuff, programming stuff, developing features and different stuff, I'm always asking these questions okay, so what's our goal? What are we doing? What are the technologies that we're using? Is there anything better out there? And I'm totally getting into the nitty-gritty of how this works, and if our approach is solid. And so it's something similar I'm doing with Full Self-Driving and James, is I'm saying, okay, I don't have access to Tesla engineers, or Andrej Karpathy, but I sit down with James and I just try to poke it all apart. Say, okay, is this really going to work? Like, why is it working? What's the key technologies, et cetera? And one of my main takeaways is this is the crazy thing. There's a technological or a philosophical divide with autonomous driving. And this is what's interesting. It's like you think that smart software engineers would all agree on the smart solution, like that would make sense, right? But historically, that has not been the case with technology and software. Oftentimes there's been like different approaches and different ways to do things, and they've been different camps of different engineers and developers with different pros and cons. Like, I mean, even going back to search, a lot of smart engineers, they didn't understand Google search, like what they were doing with PageRank and how data would really matter, et cetera. And there are these philosophical differences, So what's interesting with Full Self-Driving is I'm seeing this happen again, where there's philosophical differences where the smartest engineers in the world are
disagreeing,
right? On how to
One
get this
thinks
done.
it's like local maps with LiDAR. The others think it's just pure vision neural networks, right?
Exactly. And so a ton of resources are actually being put into LiDAR and mapping and all this stuff. And a lot of it makes sense because you want that extra redundancy. You want to make sure you don't hit pedestrians. You want to get your things up and running. And the problem with that is it's the perfect trap. It just traps them into.
I agree.
This.
So it seems like Elon's saying, Elon figured it out before everyone else, and he's been kind of touting that. And even the guy, who's the guy, Andrew Lewandowski or something, that guy that started, he started self-driving at Uber or Waymo or something like that. And he's the one who got in trouble for trading secrets,
Google,
I think.
Google,
but he was like
Uber,
known as like the most brilliant mind in self-driving, I think, or one of the most. And he even admitted to it publicly in an interview like a year ago, finally, that Elon's right on LiDAR. And I don't think people woke up to that. There's just still in that camp, like you said.
Yeah. And what's interesting is with this philosophical divide, it's sucking up like the world's best talent and the world's best capital in terms of autonomous driving into the wrong approach.
A trap, The trap is a good way to say it.
It's like, it's so crazy, and I can understand the trap, because it really, it's so complex in how you solve this problem the right way and your values and everything. But ultimately it's obvious to me by following what Tesla's doing that Tesla has the right way and
right formula.
Right formula. And even though it's going to take time to roll out and get, really, really good, I think people misunderstand how far Tesla has come. Like it's really, they've solved it. Like they've solved full self-driving, and it's just in terms of all of the major building blocks and all of the pieces and the strategy, now it's just a matter of time to roll that out and let it become mature. And I think, and because of that, I'm getting like more and more bullish on full self-driving. I still sense that it's early on for people, investors at large, to understand its implications, in terms of how big it's going to be, how much Tesla is in the lead, and eventually how much it goes into Tesla's bottom line and valuation, So I agree with you actually that it could be a ways off before all of this stuff starts to make sense. But
when it does, it's going to be immense, the payoff. It's huge. But it could be like 3 to 5 years out, right?
Yeah,
it might not be 2 years. It might not be 1 or 2 years.
Actually, I wouldn't say, 3 to 5 years is being very...
very conservative.
Very conservative.
But that's where I like... I mean, I would say 2 to 3 years is probably my realistic, but I'm trying to gauge my expectation at 3 to 5 years. 1 to 2 years would be too optimistic for me, but I love it.
I think part of it also is what happens within a year. I say Q1 of 2022, full self-driving is, wide released already. It's really good, it's just, and Tesla has found their first municipality to roll out kind of their first kind of
Acceptance.
limited robotaxi stuff. Like, what happens to the perception of Tesla and to its valuation? Do
Yeah.
investors start to get it, or do they
Yeah.
just they push it off until it gets more obvious? You know, it's
I
kind
could
of,
see there being
yeah.
like news reports like there is now of like Waymo doing the thing in Arizona, in
Mm,
that small area. There's like publicity written, you watch CNBC, they'll interview some Waymo people saying, hey, self-driving is here. And you'll have similar reports of the Tesla, except people won't be able to tell the difference between what Waymo is doing, what Tesla is doing, even though you and I know what Tesla is doing is
mhm.
like the real thing. But the mainstream media won't be able to portray the difference that way. And people will just be like, oh, another self-driving thing. I wonder what happens. So it could be like a few quarters after that before it goes to more municipalities, and then it becomes widespread enough where suddenly people are like, wait, Tesla is the real deal,
Yeah, yeah,
That's what I think.
yeah, definitely. Yeah, I think in order for full self driving to move the needle in terms of valuation, it's really got to be understandable to the institutional investor. You know, and
And yeah,
yeah, and I think a lot of people just they think the institutional investor is like really up to date and is, you know, following Tesla a lot and is watching, you know, these YouTube videos, but they aren't, you know, that's just,
they're not.
yeah,
That's our information advantage right there. That's
exactly.
our
Like
information
they don't have
advantage.
time. They're not
And everyone's
interested.
watching this stuff.
Yeah,
Yeah.
they're not interested in this stuff. So
Yeah.
there's a discrepancy. There's a gap of time that it takes for, I think, institutional investors to understand Tesla. But I think for me personally, that's where I've been going back to over and over is kind of what Tesla's doing with full self driving. And I've been super impressed by everything that Tesla's doing. I think they're just nailing it. And I think in a year, it's going to be super impressive.
Yeah.
Yeah.
I
And
hope there's no the thing I'm hoping is that there's no setback where like he puts this button out in 2 weeks and you have, instead of 1,000 people beta testing it, now you have 10 or 20 or 50,000 people beta testing it. And then one of those people, there's like a horrific car crash and it's like on the cameras and it gets publicized, and that could really set them back, perception wise, I
it's
think
true.
for many months or a year, I don't know, until they get like a few nines even further, like, so that's what I'm worried about. But I think they have to conquer that risk sooner or later.
Yeah. I mean, I'm not as concerned because first, it's still supervised beta. You still have to put your hands on the wheel, pay attention, you know, still taking
Yeah. You and
responsibility.
I know that, but I
Yeah,
think the media would not
that's
portray
true.
it that way. They
Yeah.
would just do clickbait headline like crazy on it.
Yeah, that's true. And I think the download now button, do you think people are really gonna my interpretation was the download button would be more of an application, you know? It's like submit your
Yeah.
interest. 'Cause I can't imagine, you know, 100,000 people or whatever getting, you know, the full self-driving beta next week.
Sounds like that's what he's
Yeah.
planning. I mean, I think it should be a little more like you email the people and then they put it on your software as a button you have to press and agree to things. And I think they'd still get tens of thousands of new beta testers to get more data because that's probably what they really want is more real world data.
Yeah.
But to go full on, like get a potentially like hundreds of thousands of people clicking this button or everyone who's bought the full self driving all at once, maybe they're ready for it. I don't know. I haven't been testing it. I know Vincent, he was talking about but he was giving a lot of good information on a lot of things. And I know he mentioned like it's not ready for like U-turns and there's a few things that it's a little like, it's still not quite there. And he's been using it regularly. So I'm curious to try it myself for sure. But I'm just nervous with 100,000 people all getting it at once. What could go wrong, right?
Yeah. Matthew 1 from the live stream says, you will see the difference on the bottom line due to uptake on full self-driving, regardless of officially reaching level 5. 90% or more margin will change everything by the end of the year. Great point, Matthew, actually. That's, as long as full self-driving is out there and it's working, you'll have a higher take rate. Right now, it's at 25% in the US, I think, and then even 1% in China. But that is
Yeah,
bound to increase, probably
that's going to increase.
help the bottom line, help profit, and that's what matters to a lot of these institutional
Yeah.
investors and analysts. You know, um,
I would guess that the increase might go from like 25% in the US to like 40, maybe
mhm,
50% at most in the
yeah,
US, even if it was like, because there's still like half the people that are like, I don't want to do self-driving.
that's
It's
true.
enough for me to do electric. And they won't even take it, or they just don't buy into it until it's like widely accepted across everyone, because there's so many Tesla owners that aren't even that well informed. They just own a Tesla. They don't really even own the stock, or they're just kind of like, that's the latest thing, I'll get it. But
Yeah.
they're not going to even use self-driving if it was an option.
Yeah. Chris Sid from the live stream says Elon has confirmed everyone who has FSD in the US who wants the beta will be able to download it once 8.3 is released. So I don't know. For me, I read the same tweets, etc., but I interpret it in a different way.
Yeah.
Just because,
Yeah.
Elon says something and he intends to do it, but there's a flexibility and a reality to the situation where he adapts to. So come next week or something, the situation will be different, I think, and.
And it might only be the people that get 8.3 or the people that email that email address and get accepted somehow first. Then they get pushed to the 8.3 to do it. Yeah, who knows?
Yeah, especially. Hey, what's I want to hear an update on your kind of Tesla position. Have you done any moves? Have you sold any shares, or your
haven't sold? No. I haven't sold any shares. I sold some like real deep out of the money options, like weekly options for like 900 strike for like a couple bucks, end of last week. I was like, there's no chance going to 900 from 600 in a week, but who knows? Maybe today's rate is tough. But I'm looking to just start selling like deep out of the money options on a portion of my position, weekly, where there's like virtually almost no chance it goes up, 300 points in a week. And if it does, then I'm happy just piecing out of like a portion of my shares, at that price, and then maybe buy back lower, just keep, instead of 95% or 90% invested in Tesla personally, I'll be 70% or 60% invested in Tesla. Yeah.
What percent?
But I'm not buying any call options, really. No, I'm not buying actually at the end of last week, I did buy on Friday. I bought a few of these, just a few 700 strike call options for this week that expired. They were like $4. I sold half of them for $15 earlier today, and another half I'm just going to hold on to it in case it gets to 700 plus. But that trade wasn't looking too good yesterday after the market tanked again.
Exactly.
But today it's looking a little better, so that's good. But that was just a very small play. I do these like really tiny trades from time to time that have like a 1 in 5 chance of working out, and most of the time they don't. But this time it did.
Yeah. So what percent of your total kind of share exposure would you write like cover calls on?
Probably 50%.
Oh, wow.
Yeah.
Okay.
Yeah. And if it started getting really high up, I might buy like half of those back or a third of those back, because I don't think I'd want to piece out of 50% of my Tesla shares, but maybe like 30% I'm ready to diversify out of if it gets really high, if it has like a really bombastic week going up 50% in a week, I mean, that's where I'm selling the calls. And if it goes up 50% a week, I probably should sell 20% at that time just to start doing a little more diversification.
Yeah. I mean, from our past conversations, it seemed you had about 100,000 shares controlled, combined your common shares and also your deep in the money contracts. Is that about right still? About 100,000?
Yeah.
Okay.
Yep.
And so if you're doing half of that, let's say 50,000 shares worth of covered calls, can you walk me through an example of kind of what kind of strike, or what's the last, you said you did you sold 900 strike calls recently, you said?
Yeah. Yeah. So most recently, I actually just sold 50, 900, not 500, because only 5,000 of my shares are held long-term at this moment. And if you write covered calls against shares that are not held long-term yet, then you're resetting the timeline of those shares. So I have another like 40,000 shares or something like that that'll be long-term come mid-March or later this month or early April that I bought a year ago, and so I'll start selling like 400 maybe covered calls way out of the money. But this trade, this last week, I think Tesla was around 640, or I forget what day it was, Wednesday or Thursday last week. I was like, I'm watching it go down. I'm like thinking, I got to do something to start generating income so I don't panic and sell shares on the way down. I need to know I can have an income to survive on. So I sold, I'm starting to experiment more with selling these out of the money covered calls. So I sold some 900 March 12th expiration, 50 of them, Tesla out of the money calls. So Tesla would have to go to $900 or above by the end of this week for me to lose 5,000 shares of Tesla. And I would lose that for $900. It'd be like having a limit order to sell 5,000 shares of Tesla at $900. That's how I think of it.
Yeah.
And so if it goes to $900, I sold my 5,000 shares. But if not, I collect a premium of I think it was like $2 or something like that at the time when I sold them. So $2 times 50 times 100 multiplier. What is that? Maybe it was $4 or $3. I don't forget, but I collected like $2,200 premium for like a week. And I was like, oh, that's not bad. I'll collect $2,000 a week. Then when I get more shares to do it with, it could be $10,000 a week or something,
Wait, hold on. So if you did 500 contracts, that would control 5,000 shares, right?
50,000. 500 would be 50,000 shares.
Okay. Yeah. Oh, no, wait. 500 would be 50,000. So you did 50 contracts. 50 contracts.
Yeah, it's only 5,000
right.
shares I hold long term at the moment. Yeah,
okay,
and that's what I wanted to sell it against.
Exactly. So 5,000 shares times 2,000, that would be 10,000. Did you get 10,000 or
no, times $2? No,
$2, no.
It was. I think I collected like 2,000 or 3,000 premium. So I don't know what's the price then.
50 cents?
Maybe it was like $1. Maybe I sold them for $1 or less. Yeah.
Or $1. Oh yeah, or something.
I have to look it up, but
Okay.
It was a small amount of money. It was like picking up pennies before Steamroller, like the guy Gary Black was doing. I was like, that's what inspired me. Like, hey, that guy's doing that. I should start doing that to generate income. And so I'm trying to experiment with that to generate some income while Tesla. Yeah.
Yeah, I mean, if you're able to do that with 100,000 shares, and if you make 50 cents a week, per share with out of the money covered calls, shares. That's 50,000 a month, a week, right?
Yeah.
So what is that times 50? 2.5. Wait. 50,000.
Yeah, 2.5
million, right? Yeah.
Yeah.
That's impressive, actually.
That's impressive. Yeah, that's a year. That's 2.5% interest per year.
Yeah.
You're getting for selling some out of the money calls that would probably never happen. It's probably never going to go up 50% in 1 week, unless suddenly in 1 week the robotaxi explodes and all the regulators are like, hey, this is a new economy. Something crazy would have to happen for it to go 50% in a week at this market cap level.
Yeah. I mean,
but it could happen.
But then you might not want to do all of your shares,
all of them,
because maybe you want to keep some in case they get called away. So maybe just do half or something, I guess.
Exactly. That's what I'm trying to do.
And it sounds like interesting time to do it. Tesla's 10x. Is bound. It's the most likely maybe scenario is some consolidation. So, do you think that would the longer you do it, the more riskier it'll get? Meaning, the more it consolidates towards the later on, let's say a year later, you're still doing it. It could be primed for a breakout. At a certain point. So, do you think perhaps the earlier you do it, the less risky perhaps it is? There's maybe more hope right now, that
it's not going to be called.
Yeah.
No, I think so too. And the options are more expensive now. And as the year goes on, if Tesla gets less volatile, then the options will be less expensive. And so selling them won't be as profitable eventually as they are now, even the deep out of the money options like that. So it's, I think it's a good time to do it for me personally. I'm doing it. But that's just because I have 90% of my personal, not the fund I own part of or whatever, but I have a huge part of my personal net worth tied up in Tesla still, and I'm just trying to be tax efficient too, and not do it on all my shares, just on the shares that are held long term, carefully.
Yeah. I also think it might not make sense for someone to do it if they don't have a ton of shares either. I think the more shares, the income becomes more meaningful, and the risk is lower. You're not having to take a super high risk.
Exactly. Like before, when I had my job, I had a great job that paid me great, and that was my hedge or income, and I could rely on
Mm,
that. And I probably wouldn't sell these covered calls. But now, since I don't
yeah.
have kind of a hedge of stable income, I feel like I need to. I don't want to just keep, borrowing against my account or, whatever. I'd rather just have some kind of consistent income coming in,
Yeah. Yeah. Makes
enough to
sense.
live on with my family. Yeah.
Yeah. Um, I know you with your IRA, you took 10 million out and or you transferred it into more of a value kind of portfolio. Um, how has that done in the past few
Yeah, I
months?
mean, I guess I picked a good time. Let me pull it up right now.
Yeah.
Um, Last I looked, it was up. I'll tell you right now, looking on my phone. Yeah, it's up 58,000 today. So it's up to 10.2. So it's up just 2% since I did that,
Okay.
which is still good compared to like the rest of my net worth down 40%.
Yeah. Yeah.
Since I did that. So I'm happy I put some of it away into a conservative value-based strategy that is like against my own mythology. So yeah, that was lucky that I was able to do that, I guess. Yeah.
Yeah. So with your 10 million in this more value kind of, you know, basket or something, how much of that was motivated to kind of keep safe long term for retirement, et cetera, versus let's keep safe until we can deploy it for another opportunity?
More the prior. Just keep safe, don't touch it. I have enough resources to deploy for my other tactics that I want to employ, so it's kind of, I'm thinking of it as like locked it up, throw away the key, don't touch it, and if growth stocks take a huge hit, like maybe today's just a dead cat bounce and we drop 5% tomorrow and 5% the next day and 5% the next day,
Mm-hmm.
then this is a protected basket of money that's, shielded from the growth tech stocks getting slaughtered, and they're, but they could also get slaughtered, but if it tech, it's more just for protection. Yeah. I'm not planning to deploy it for anything.
Yeah. We have a live stream viewer, LPX Star, says, would you recommend owning a single stock in your portfolio? Um, I'm assuming the question means, would you recommend owning just one stock, right? In your
Hmm.
portfolio. And first off, yeah, I can't give any, financial recommendations or
Yeah.
advice, but and um, from a
It
person,
depends on what they mean by your portfolio.
yeah,
Like
it's like,
your portfolio to me sounds like your entire wealth. And no, I would never do that. If it's your play money portfolio, then
uh-huh,
maybe, yeah, but that has to mean it has to be your play money portfolio.
uh-huh.
Yeah, but we can't give advice on this stuff.
Yeah, yeah. Like for me, I've for many many years, I had just Tesla as pretty much the main, almost only stock in my portfolio. But then again, it was my other basket. I had safer assets too, that I could count on
Yeah, you
for
had
living
other income
expenses.
coming in you
Yeah,
could
other
count on.
income, other
Yeah,
assets I
same
could
with
count on
me.
for retirement. So, yeah, I mean, I kind of I like to have this kind of dichotomy, this mix of sane kind of sane risk averse behavior, but then combine it with very, in a sense, um, outgoing, not crazy behavior, but really trying to capture big wins or big risk in a way that is in my advantage. Where the odds are in
Mhm.
my favor. But yeah, definitely, I don't think we can completely
It's
give
a good
advice on that.
question though.
Yeah.
Yeah,
Um,
yeah.
we have another actually Twitter follower, Woon Lee says, holding Tesla long term, or Tesla is a long term hold, but has recently had a 35% pullback in less than 2 weeks. Has that changed your strategy in any way? I'm curious to hear from you. Like, you've had a big cut. Let's say you don't take into consideration today's bounce. It's at 667, 100 points. It's, yeah, 8 minutes before
Still up.
close, and so it's still up, going pretty strong.
Nice.
But let's say we
Okay.
don't take into consideration today's, price action. So let's say we're in the 550 or so range. Um,
Hmm.
like, being exposed to 100,000 shares as 90% or whatever of, your portfolio or assets, it's a big hit when the stock goes down 35, 40% or something in a matter of just a few weeks. Did you wish at any point you're like, oh man, I should have sold like at
Absolutely,
least
of
a third,
course.
at
Yeah.
least a third.
Of course, I wish that. Who wouldn't? I mean, part of you at least, we have different voices in our head. One voice is like, Emmett, you should have sold some of it at the top there, or, you should have diversified then, or you should have sold more. The voice was like, you should have sold more of your covered calls, or, but I couldn't really because of the tax.
Right.
I didn't want to mess up my tax holding time periods of the other shares that are about to be long term. But, yeah, I mean, yeah, I wish I did, but now it's going back up, and I'm like, I'm not selling a piece, and so I just have to kind of rise above that. And it's like, the different voices in my conscience are like, yeah, buy, sell, but the bigger voice above it all is like, this is a long-term vision, Tesla. This is a long-term, like, I still believe it's going to be the biggest company in the world by the end of the decade. Like, that's what I keep focusing back on. Like, this is going to be the biggest company in the world in the decade, by the end of the decade. How can you convince me otherwise? And until I'm convinced or doubt that, then I have to, kind of just adhere to that bigger voice that's, trumps everything else, all the short-term noise, and that means that I have to know, like, might have to batten down the hatches and wait 2 years until we get to new all-time highs, or maybe we're in a $400 to $600 range for 2 years. I was even, mentally preparing myself for that. Like, wow, maybe all the growth stocks got way ahead of themselves, and we're all going to be in this new range for a long time. I wouldn't see Tesla going below $200. That would be like, really, like, whoa, what's going on? That would be like a big buying opportunity to me. Like, I would potentially use margin to buy like long-term options or something at that point. But I could see this, 400 to 600 billion market cap kind of range for a few years until the full self-driving really proves itself, or until the Cybertruck's like full production, So, yeah, I mean, I don't, if today didn't happen, of course, I wished I would have sold some, but I wasn't going to sell any.
Yeah. I mean, did taxes play a part in kind of maybe leaning you to be more hesitant to sell? Because it seems like what a lot of your Tesla exposure is still short-term capital gains, right? So, and which is extremely high, especially in California with, state tax. I mean,
if you add that on,
yeah, did that have any kind of impact or influence on your thinking?
Absolutely. Well, it has influence on my thinking of not selling more covered calls. I only sold 50, right? But if I sold, and that was like, 5% of my total share position. You also have to know 50% of the shares I control are long-term options that are like deep in the money, like 170 strike or 230 strike calls, so, it's tricky if you're trying to sell covered calls against those. But those, at some point, I'll either have to liquidate a portion of them to hold the rest of it without holding margin shares. So I might only end up having 75,000 shares or something like that. Or maybe I'll hold the shares on margin, or I'm not sure yet. I haven't decided. But the shares, like the close to 50,000 shares I hold total, then, only 5,000 is long term right now. So I only sold 50. But eventually I could sell like 300 or 500 contracts deep out of the money.
Do you think if all of your holdings were in a IRA, let's say 100,000, whatever, shares controlled in an IRA, do you think when Tesla was at 850 or around there, would you have sold more, you think? Or would you still have just kept it, you think?
That's tricky. I probably would have kept it. I think I would have just kept it. And on the way down, maybe I would have sold a little bit on the way down, a little bit of the shares, but probably not. I probably wouldn't have. I probably would have just be, when I'm unsure of it, I usually decide not to do anything.
Yeah.
There's something also called like revenge trading. Have you heard of that term?
No. What is it?
Yeah. So when I was like a day trader, I remember, like when you start losing money. sometimes people want to like get back at the market, get some revenge. Like, no, the market's wrong. Tesla shouldn't be dropping this much. And I've done that before with Tesla.
Yeah.
When I had my personal account, like I'd buy shares on margin after like a Goldman Sachs downgrade and the stock went down. I'd be like, I'm going to buy more. I'm revenge, And luckily it worked out for me, but it doesn't have to work out for you. It could really backfire, this revenge trading. It's like an emotional like
Yeah.
reaction. Think of
Yeah,
it as
exactly.
to buy more. Like I'm right. The market's going to be wrong,
Yeah.
so I'm trying to be careful and cognizant of that, because when it's going down, one reaction is like get revenge, lever up, get more shares on margin, or sell shares and buy call options,
Mhm.
and I have to be careful of that. I mean, I've done very, if my IRA account was like $10,000 of Tesla shares and Tesla started going down, and it went down to like $6,000 of Tesla shares. If it was like that and it was just like play money and I had like a job that was paying very well and a whole
Yeah.
other 401k like I did before, then yeah, maybe I'd pull some moves and sell some shares for call options. But that means that play money was like a small portion of my wealth at that time,
Yeah.
But when it's like a huge portion of, or your entire wealth, then I'm a little different. I'm a little not quite as risky.
Yeah. Yeah. Trung from the live stream says, "Great T-shirt, Emmett, rocking that rights law." Where did you get that shirt from?
This is the ARK Invest
Oh, okay.
swag.
Oh, okay. Got
Yeah.
it.
Remember they were
Nice.
selling swag? I got a bunch of the ARK Invest swag because I was like, oh, it's going to charity. That's my thing.
Yeah.
Let's get these innovative progressive managers
Nice.
giving back more. And so I like their swag. I like their stuff anyway. I probably would have bought it anyway, but it was just really cool. So I bought a few things from them.
Yeah.
Yeah.
Yeah. On the topic of kind of revenge trading, like I see that often actually, like some analyst or whatever downgrades a stock, or, there's, it seems manipulated or something, or media coverage, and you want to get back. But it's like, for me, it's always seemed kind of silly in the sense where the market is it's so much bigger than, I feel, just one player, or it's not a 2D, like, me and, like, it's not like you're at a card table and you're
Hmm.
playing, poker with one other party, it's so much more
Hmm.
complex than that. There's just like, the way I kind of look at it is like, it's so many dimensions, it's like thousands and thousands of different players, factors, angles, and all this stuff that, when you're revenge trading, it just seems like your emotions might be, narrowing you in some type of narrow angle, when the reality is, no, it's much more complex.
Hmm.
And the best way to think about it, I think, is just take a step back, and just try
Yeah.
to embrace all of the things that are going on, and to trade or invest with what's going on. Like, I don't know. There's something about, just, this is my own personal thing, just being at peace with the market in a sense, like not fighting
Yeah.
the market as much. And even, for example, with Tesla going down, this past few weeks, down to 540 or whatever, from 900, it for me, it's like, well, if anything, it's just, I look back and I go, yeah, that's the risk. That's the risk that was already there in the stock price, and it's just coming to
Hmm.
light. And sure, it's volatility is happening and the stock price has dropped. Um, and I need to, make my own decisions, on how I view the company, and, the risk reward of selling or buying or not, or doing whatever. But yeah, it seems like, there's more. It just seems like, the markets are are profoundly deep and complex. I don't know if, like,
Yeah.
if that's fully appreciated.
Can't control the market.
Yeah,
It's just so uncertain, and it's
yeah,
not, the market just is, and you just have to do the best you can to adapt to it. You can't react. You have to just adapt to it, if that
yeah.
makes sense. Like, yeah.
Exactly. Juan Medinar 20 on the live stream says Tesla closed at 673. So yes,
Well,
actually, yeah,
nice.
673.58, up 110 bucks,
Wow.
19.6% up. So it's almost 20% up. Um,
Oh man.
so Emmett,
Sorry.
curious, like, what does it, for you, not seeing the stock price kind of sell off at the end of the day? What does that mean to you? I mean, Does,
It's
does that,
bullish to me.
yeah, does that
Yeah,
show more strength
bullish.
that people aren't just trading it, that the move was actually had some legs to it?
Yeah, it's going to be really bullish tomorrow if we have another up day
Hmm.
tomorrow, or if there's just not a sell off tomorrow. Like I could see a scenario where like we start up tomorrow like 1%, maybe 2% or something. Like it seems like the bull run's continuing, and then there's a quick sell off, to finish down 1% or 2%, or and that would be a little bit of a flag to me. Like, well, I guess there's more selling to go. Or tomorrow, what if we open up down 2% and stay down 2 or 3% the whole day? That would also be a flag. Like, uh-oh. But if we can open up, even if we open up down 2% but finish the day flat or finish the day on a positive note, that would be bullish to me. Or if we open up the day flat or bullish but end the day, somewhat flat or bullish, I don't know, that would be good to me too. Like 2 days in a row,
Hmm.
I think is important in this type of correction to kind of, to me, to almost prove like, all right, we're done with this correction, back on track to where we, marching forward again.
Hmm.
What do you think? What are your thoughts?
Yeah, I mean, that's because sometimes you see these wild swings where it's just like,
Yeah,
this way, and the next day it just completely changes. But yeah, I mean,
versus,
yeah, the more we could see some stability, some legs. Um,
yeah,
Another thing is sometimes like, what's bullish also with big moves, is that, you know, if the big move didn't have some legs, then they would be profit taking, at certain points, and even reverse, short selling or something at weaknesses. But to see a move happen, but then, continue some strength or some stability, it's showing that the weaknesses, if they're like, if it was a weaker move, it could be easily more shorted or sold into. People are saying, "Hey, I think it's going lower, so I'm selling." Right. So as long as
hmm,
there's this whole thing of a big move up with volume plus some stability is showing, I think, definitely some legs to it. Yeah. But
yeah,
on the
for
flip
sure.
side, we had a big move down the past few weeks, and so yeah, it's got a while before we can really get that sentiment, confidence back, I think. Um,
Yeah.
yeah. Roblox. We have a couple questions from viewers here.
Hmm. Yeah.
Actually, first off, Zach Taylor says, "What is Emmett's favorite dark chocolate candy?" Are you eating some dark chocolate? What's going on?
I mean, some like these it's actually, they're really, I don't usually like the sugar-free stuff. It always
Uh-huh.
tastes kind of fake. But I got this thing called, like, I went on a road trip with my wife, which I don't know if you can see,
Yeah,
but Bravo Farm, it was like a local, it was at a supercharger,
got
this
it.
like Bravo Farms, I guess. And we were coming back from like Palm Springs or something. And I was like, oh, let me try the sugar-free dark chocolate almonds, and they actually taste pretty good.
Mm.
So I got some, and I'm just finishing a few right now, but they're from a few weeks ago. But typically I don't eat that sugar-free stuff.
Yeah.
Usually I have just like, I have all these like weird. I have these. I like these a lot. The skinny.
Yeah, yeah, those are good actually. I've
They have this
tried them.
peanut butter one that's really good. The peanut
Really?
butter chocolate one is so good. Yeah.
Yeah, I'll try it out too.
Um,
Yeah.
Try that. But I also just like dark chocolate. Like there's a brand Perugina.
Yeah. Yeah.
There's a bunch of. No,
Um,
I put some tweet up, and a bunch of people gave me ideas that I've been
yeah.
buying.
Have you seen this bar? Actually, let me get out of the
Go
picture.
back so I can see the
There
focus.
it
Oh,
is.
now I see it. Love good fats.
Yeah,
I've heard of the good
chewy,
fats.
nutty, dark chocolate sea salt. So this thing, man, this thing only has yeah, it only has, I think, like five grams of net carbs or something. It's pretty crazy.
Oh, nice.
Yeah, yeah, good stuff.
I want to try that.
Yeah,
Yeah.
yeah. You get it on Amazon and it just delivers to you.
Cool. Yeah,
um,
exciting.
yeah. Zhang Singh says, "At what market cap would you buy Roblox tomorrow?"
Mm.
Have you been thinking about this at all?
I have been thinking about it a lot.
Yeah.
I mean, a part of me wants to see how it trades, like in this kind of. If today didn't happen,
Yeah.
I would think like it's going to open below its 29 billion last valuation round, like maybe 25 billion or something, and maybe I'd buy some there. But after today's kind of bounce back, if tomorrow's another bounce back day, especially I can see it opening at like a 50 billion valuation. And so I don't know. I'd buy maybe a little, I'm still undecided. I'm going to sleep on it like what you do. You think about it while you're sleeping,
Yeah.
like meditate on it. And they just come out with some guidance yesterday. And obviously they're going to slow down their growth, and that's expected. So hopefully that'll dampen,
Yeah.
the market hype around it. And also because they're not doing a traditional IPO, you don't have all these institutional bankers hyping it up with their clients. And so you have that demand not really playing, but it's a whole different ball game with the direct listing. I'm not too sure what to think of how it's going to trade tomorrow, but I would like to get some at a reasonable valuation below, 40 billion or below 35 billion. I'd like to get a little bit at least. And if it goes lower, get more maybe. But the more I've studied it, the more I realize like, there's a lot of competition, and, Roblox, they pay the 30% to Apple, the App Store, right? And then, there's a lot more costs involved. It really depends on how much really good developer talent they can acquire or like grow on their own platform, right? So I got to really examine that. And I've been playing it a little more with my kids, and it's kind of interesting. But I also want to play more competitors or see what my kids think about the competitors. And they like Minecraft and this Among Us game and other games. So it's hard to know if Roblox is here to stay and it's going to be like the real thing. But I'm still very excited about it and see where it's trading, and I'd like to get a piece of it at least.
Yeah.
You've been looking in their latest guidance, or what do you think about it?
I mean, I think it's a fascinating opportunity, just the metaverse. I mean, I like their execution. Their key insight to me is so obvious but genius. It's they want to provide that safe place, for the metaverse, and I think it's the right key insight. Focus on developers, technology, etc. I like them. I mean, it's a question of valuation, I mean, yeah, and also how fast they're growing and what the expectations are. So I'll probably pick up a small position to start out with, and then I need to read up on their latest guidance. I haven't looked into that right now, but make some moves, and then I think the thing is, I think my situation is, having so much in Tesla, and like seeing kind of what I think is going to be kind of one of this huge shift right before our eyes in the next few years with autonomous driving and transportation. It's like the money that I put into something else, I have to pull in effect from Tesla, so I have to consider that as well. It's not like I have
to take the tax consequences of pulling it.
Exactly.
And redeploy it. It's a big deal.
Yeah. And then, so it's always a weighing against other, business or investing opportunities, but definitely, bullish, and, hopefully I could keep on, following this company and its developments over time.
Yeah.
Let's go into Martin Muldoon from Twitter says, how do you envision robotaxis being rolled out? And then Greg Gillen says, I'd love a continual discussion on your convictions surrounding full self-driving and clean timelines, as well as how Tesla might realize those revenue and profits. I mean, we've discussed some of the stuff about, take rate going higher. Maybe actually that shows up, quicker. But also maybe there's a time where people start to realize, hey, like this is really happening, full self-driving. You're more in the camp of this might happen a little bit later,
it's just slower than people expect. It's not gonna be like a turn on, everyone's turned on. It's gonna be a slow mass adoption, that can take a year to 2 years to 3 years or 4 years, it could take years to play out.
Yeah. And I think this is one of the reasons why so many of us in the investor community, probably including a lot of people who are watching, are dying to get their hands on full self-driving. We want to test this thing out. So you mentioned that you're getting a Model S. Is it a refresh? Have you put in your order?
Yeah. I put in my order for the Model S refresh. I'm going to trade in my Y for that.
Okay.
hopefully, I don't know if I'll get it. I haven't got any notice that I'm going to get it end of this quarter. So maybe I'll get
Yeah.
notice soon that I'll get
Yeah.
it before the end of March, but I'm not sure when. One thing I want to say about the full self-driving beta real quick is,
Yeah.
do you remember the smart summon they put out? Remember the smart summer? And
Yeah.
that was like a really cool novelty. The first few times I used it, it was like cool. I want to test it out and see if it works. I'm just hoping, but I never use it anymore. I don't
Yeah.
ever use it anymore. It's just like a little too nerve-wracking, you know. You know,
Yeah.
functionally
Yeah.
it seems to work fine, but it is just a little nerve-wracking. It's like, these people are looking at it weird, and do I have to start, And so I hope the full self-driving beta isn't another version of that, where it's like, oh, it's so cool and a novelty at first, but then there's a few cases that you're like, oh, it's not ready, and then you just never use it. So I'm kind
Yeah.
of concerned. That's my concern.
Yeah.
Anyway, what was the question we were talking
Yeah.
about?
No, actually, on that point, I mean, for me, I looked at Summon. I was kind of like, it's kind of gimmicky
Yeah.
a little bit. I wasn't that excited about Summon. It just seems like a limited case thing for certain people. I think full self driving, though. I mean, this is a game changer. I mean, yeah, to completely drive yourself. It's just the transition between the supervised thing into unsupervised.
Yeah.
You don't have to look at all.
Yeah.
That's going to be, I think,
Yeah.
the big hurdle going forward. Yeah. So we're
Yeah.
talking about roadblocks. We went into full self-driving, robo-taxi rollout, but I guess we'll move on to a bit here. Here it's Howard Rodak says, a little bit off topic, you and Emmett's exit strategy in 5 or 10 years. Do you see Tesla declaring dividends, which would allow you not to have not to sell your shares for income?
Absolutely.
Yeah, what do you think?
Yeah, I do think there's a point where Tesla would give dividends, become like, I think Elon Musk referenced Tesla as a cash cow, quote, cash cow, like once or twice in some of his interviews. And to me, in the future, in the distant future, and to me, I feel like the same case, like it's going to be printing cash, like when it grows to a certain size, and they could give a ton of that out in dividends, and it'll help fund his SpaceX ambitions or migration to start a city on Mars ambitions and such. And people could do what they want with those dividends, obviously. But I do think, at some point when they've grown substantially, with the whole energy paradigm shift to batteries plus solar, that could be 10 years where it's like, it might take 20 years to play out, but maybe in 8 to 10 years, they'll be big enough where they won't have to really grow much more, and they can just pump everything out and generate a ton of cash and issue a huge dividend, and it'll be like what Apple's done, but at a much bigger scale in terms of issuing a dividend. I think that's my personal view. And in 5 years, there's going to be so many other things to be excited about. Like, I'm still excited about this, electronic vertical and takeoff and landing supersonic jet, that he has in mind, design plans. I think a lot of people think like, oh, taxis or, flying taxis. No, he has a supersonic jet in mind, like a Concorde like thing, like something that goes way high in the air and just zips you to another part of the country in like 10 minutes, or 30 minutes or whatever, across the country. So I think that's really exciting to see how that plays out. And I think that'll be more something on the horizon that maybe will creep up as something to be talked about in the next 2 to 4 years. And then maybe it'll be revealed in 4 or 5 years, and then it'll be produced in like 6 or 7 years or something. So I'm excited about that too.
Do you have
what
any?
What are your thoughts on it?
Yeah, I mean, do you have any goals of the number of shares you're wanting to keep, like ultra long term, let's say 10 years from now?
Yeah, I used to have a goal like that. And it was like 100,000, sort of what I control now, but it's also with leaps. And, I don't know if that's realistic for me. Like, what am I, I think more like 50,000, because I'm gonna have to pay a ton of taxes, and it's going to be a lot of financial engineering on my part just to hopefully try to maintain 100,000 without, owing the tax man too much, or especially on these long-term equity, these long-term options I own that are deep in the money, but I still would have to, I'd either exercise or take exercise of them on margin, which I don't really want to do. So I think, if I can hold 50,000 long term and generate income selling out of the money covered calls and get a dividend down the road, that would be great. And then I could use that to do something bigger, maybe, I'm not sure, there's a lot of opportunity. Maybe fund small businesses, I think the venture capital world is interesting because it's like you're helping the economy kickstart itself by funding a bunch of small businesses to grow and start up,
It's true.
We were talking about like the nonprofit idea, but also just venture capital in general. You're trying to help a lot of small businesses get started. I like that.
It's true. Have your views on margin changed at all? Like, after,
Yeah.
because I know in the past you've taken margin, out,
Yeah.
but it seems like currently you're a little bit reserved or cautious. Are you trying to avoid margin?
Yeah, trying to avoid it for sure. Before when I had a job and I was counting on working there until I was 60 or 50 or whatever, then and it had its own 401k plan I was contributing to. So it would have been fine if my investment account blew up. Then I did use margin a little more liberally. But now, maybe I should create a separate account for myself that uses a ton of margin. I don't know, but my main account, I don't want to use any margin, at all. Yeah, just because it's stressful going to bed at night when there's a major crash happening. You're like, oh, you don't know. Your broker could put my broker, Interactive Brokers, made Tesla 100% non-marginable a few times, and that could happen again, or any broker could do that. I think a few brokers have done that in the past with Tesla.
Mm-hmm. Yeah.
I know you don't use margin once, right? And you stop using it now.
Yeah. I mean, I held margin for, a good 3 years or so. And after I got off, I was so happy. It was for a limited time just to exercise, some long dated, option calls back in 2014 and 15. But, yeah, it's interesting. Like, this morning my wife's like, oh, why don't we go into margin to buy this whatever stock or this investment, and I'm like, oh man, it's like there's something about like two sides. Like one side is Tesla is volatile enough in itself, it's like because it's like so in a way there is some leverage already baked into this thing, or just the volatility is so crazy. With margin, you're adding on to that, you're adding on more risk, and for of course more reward, more exposure, but you're also adding on that extra stress, and the extra responsibility of this has to be paid off. Even if your entire portfolio goes to zero, this margin still needs to be paid off, right? There's a hierarchy in this stuff, right? It's not toy money. It's not like if your portfolio goes down, then this margin goes away somehow, It's not how it works.
Yeah. Margin works temporarily. It can work temporarily for someone, but long-term, you're going to get called out probably. Like there's a reason why all the most well-known investors in history are like, don't use margin. Like Warren Buffett has some famous quote about it. I forget what it is, but it makes a lot of sense, and long-term, you're just playing with fire. It's like selling naked call options or something, or naked put options. Long-term, you're probably going to get in big trouble, but short-term, it sounds like a good idea,
Yeah. I mean, in some ways, I think it could be a wiser thing just to play around, get experience first with leverage with options, with small amounts. For that, so you can, at least your loss is capped. With margin, it's, you can have all your portfolio taken away, and then you still have to owe, pay back the margin. But each person to their own, and each person, I think, situation is different. Like you're saying, when you're working at Interactive Brokers, you had a retirement thing safe, income that was, decent, good income, and so the margin, it wasn't per se life altering.
It wasn't do or die for me. Like my account blew up and went to zero. I would have been fine anyway.
Exactly.
But now it's like, I can't afford that risk.
Exactly. Like you take 10 or 20% of your portfolio in margin, then it's like, it's like a different situation. I think.
But something to think about. Maybe take like 25% of my portfolio in a completely separate account or a separate broker, and then use that on margin aggressively or something and do different things. But, that's, I'm being very risky with that 25% of my portfolio then, but at least it keeps the other percentage safe still,
Yeah.
I don't know.
Yeah. Justin Lau on the a live stream says that he was saying that earlier. He was saying he works with some keto companies, and he's willing to send us some keto stuff.
Oh, that'd be cool.
He says he works with Ratcliffe Company, super fat and keto plus keto bars, keto cookies and nut butters. Yeah, you don't have to send us anything. I'm just gonna. I wrote that down. Super fat keto bars. I'll check it out. I'm always interested in keto low or high fat, low carb stuff. As long as they don't use sugar alcohols. I can't stand that stuff, man. The sugar alcohols, jeez, they just load it up with erythritol and all that stuff.
Sometimes it's even sweeter than the real stuff, and you're like, I don't want something super. Like what I prefer is like the stuff like the Spindrift that we're like a walking advertisement.
Wait, actually, what's your flavor there? Is it
raspberry lime?
Yeah, I've got the same thing actually. Yep.
Oh yeah, I love this because there's no fake sweetener. It's just like it's got a couple of drops of juice in it for real sweetening. It's just like dumbed down. That's what I want. I don't want like fake sweeteners. I want like low carb stuff that has like real like coconut sugar, but just a tiny bit or something.
Yep. We're advertising Spindrift. Fun.
You don't know how long I went on a search like for 2 hours. Maybe probably like 5 hours in total over a few different days, trying to find these dried dark chocolate coconut crisps that were like, I used to get them, and then the company went out of business, and I was like trying to find them. I can't find anyone that sells them, like just coconut crisps, like with dried like super dark chocolate, like super dark where there's like no sugar, but the coconut crisp is the sugar, and you like chew it and it tastes really good.
Yeah.
I can't find it anymore. Maybe I should create it. I don't know, but that was like a really great keto dessert,
Nice.
after dinner or whatever.
Yeah. My favorite keto bar is Boo Keto, BHU Keto. It's a refrigerated one.
Okay.
Yeah, chocolate. They have a bunch
BHU. I'll write that down.
They have amazing stuff. Crazy Fool 786 says, which industry can Tesla disrupt that no one has thought about yet? My take is actually if Tesla tries to get too spread out, then they might lose their focus on kind of the key. The key is, in my opinion, batteries and autonomous driving. You want to make sure that you're the best of the best, because these are huge multi-trillion-dollar markets. You want to be the winner takes most in those markets. You don't want to get distracted into a small market because you think you can do everything. That said, though, Elon has demonstrated this ability and the skill set to be able to spawn so many new kind of startups within the startup concept. And so, curious, what do you think? Do you see any kind of out of the box crazy industries you think that Tesla might be able to disrupt in the future?
Yeah, I think the obvious one we've talked about a couple of times is goes along with autonomous driving is the neural network as a service through the Dojo, AI thing they're building out, and I think the neural networks they develop could be applied to a ton of different industry, things, and we'll see, I guess. And the other thing is I think a little more further off is the electronic vertical and takeoff and landing jets, the supersonic jets. I think that could be a huge industry. They could disrupt. The airline industry is so ripe for disruption. It's just terrible. Flying around places. And so I think it could be really amazing. So those are two big things I think in the future, other than the batteries and car building with autonomous driving.
I think one of the things I think I'm getting more convinced that I think Tesla will get into is drones, and either drones or kind of like the whole application is last foot delivery. So the autonomous robotaxis delivering packages or food, it drives into a driveway, and now it needs to get that food onto your porch. And in order to do that, you need to be able to take that, pizza or that fried chicken or whatever out of the car, bring it, walk, through your whatever garden or whatever sidewalk onto your porch, maybe take the step up or something, put it down. And there's like a million different corner cases too, in terms of walking through people.
Well, that's where the neural networks.
Exactly.
Yeah, that's where the neural networks will come to play, and they can have like that robot dog from Boston Dynamics be giving the last mile delivery to us. It'd be crazy. Imagine having one of those little robot dogs come up and drop off
Yeah, yeah. Hopefully they
That'd be a
can
little
make it
freaky.
look. Hopefully they can make it look nicer than that thing. Boston Dynamics, man, they're crazy.
Yeah,
But yeah,
yeah,
if they could do that, then that unlocks. I think it unlocks a whole nother business model or field, because then, especially if there's a time period, let's say of 3 or 4 years, where Tesla owns the autonomous transportation market and they can own the last foot kind of market, then it's all humanless, right? The cost is so negligible. They could just open up just huge, services and products and logistics just all through this network. They could just become a completely dominant, player, not just in transportation, but in services and logistics and transportation and all this stuff.
yeah,
Yeah.
absolutely.
Yeah. Also Tesla House, man. I mean, if they're doing the HVAC with, with air conditioning, and they could do water
Yeah.
heater, and,
They're going to create some boring company houses made with
yeah.
boring company bricks. I bet in that space
Yeah.
village that Elon was
Starbase.
talking about.
Yeah. I mean,
Starbase, yeah,
yeah,
that's going to be the
Starbase. What a
village.
great place to create Tesla houses, Dude.
Yeah, it's going to be, I think, for all the people that they want to prepare for migrating to set up this city on Mars that Elon wants to do. You're going
Yeah.
to have thousands of people shipping off every 2 years, every Mars cycle,
Mm-hmm.
and so you have all these thousands of people preparing together for 2 years in this Starbase, so they can all work together going to Mars, right?
Yeah.
That's what I think.
Yeah. I mean, what a cool city or town to build with, like, you get your Tesla solar roof, your power walls, you have your HVAC, Tesla HVAC doing your heating and your cooling, your Tesla water heater. And
Yeah.
so everything's electric, everything is renewable, and the rest of the house doesn't seem that complicated to build. You need foundation and plumbing, the electrical through the house, etc. But I mean, that would be amazing if Tesla could build, like, build that, make 1,000 houses in that city.
Yeah.
Yeah,
I think
I'd
that'd be
want one.
amazing.
I'd want one of those houses, Yeah,
Yeah, for sure.
definitely.
Lots of us.
Yeah.
Yeah.
We have a question here, on solar roof. So, here it is. Next lease says, spending 50,000 cash on my Tesla roof. They are making bank, I can tell you. So on your previous house, you had the Tesla solar roof, right? How was that?
Yeah.
How was that experience?
I loved it. It was great. I mean, we didn't have to worry about our electricity bill much at all. We had two electric cars charging a lot, so we paid a small amount. And the house wasn't that big, so the roof wasn't huge. I think it was like 8.3 or 9 kilowatts or something like that.
Okay.
But it generated enough electricity to offset most of our electricity bill, even though we're charging two cars, regularly. We didn't drive our cars too much. That's why. And then when the power went out from the fires or whatever in California here, then our power was still on, working just fine. It was great. So you just had that security blanket, not having to worry about a generator and getting gas for the generator, and that running out and it being all loud, and it was so much better. It was worth the premium, and also the roof I thought looked nice, and it had the long guarantee. And we're about to get it on our house here. It's going to be like an 18 kilowatt system, I think. So it's going to be a lot bigger. We're going to get 5 or 6 power walls, so we'll be charging our cars fully. And that time in that house, I don't think it powered the air conditioning like in the summer, which was a little bit of a problem because the air conditioning, it had 2 power walls and it was like sucking up too much power for 2 power walls. But now with 5 or 6, I think we'll be able to use air conditioning if we had to. Even with the power being out and being off grid or whatever. So, I mean, I love the solar roof product. I think it's definitely.
When did you get yours installed on your old house?
The other house?
Yeah.
It was I think it was end of 2017 going into early 2018. Yeah, I was like one of the first people in the Bay Area. It could have been end of 2018 going to 2019. No, I'm pretty sure it was end of 2017 going to 2018. And I think we were like the second person in the North Bay area to get it, and it took a while because we were.
Is there any like maintenance or cleaning involved? Do you have to like dust off the solar roof at all ever?
No, I mean, well, in Northern California here, it doesn't, sometimes it won't rain for like 3 or 4 months straight. And so, yeah, sometimes it gets a little dusty and you're only getting like 60, 70, or 80% of the sunlight you might have if hasn't rained in several months. And so you want to wash it with like a hose or something. You have someone, you get a ladder and you spray it down. Um, but once it rains, I think it cleans itself from the rain. So it's pretty efficient.
Mm-hmm. Yeah, yeah. So I'm in Texas and I'm needing to figure out what to do. I could do a solar roof. I could do solar panels
Do
on
the
the
roof,
house,
man.
do the roof. But
Solar
I could
roof.
also do just a solar roof or solar panel. Just we have a detached 3-car garage, so I could just stick it on
Oh,
only
wow.
that. So, but I'm
No,
not
do it on
sure.
both, man. Get a ton of power. Suck that power in,
It's like all
man.
that power, even though the problem is I don't even think we're going to be in this house for more than 3 or 4 months out of the year. So
Yeah.
I don't know.
Well, my feeling is I think it'll up the property value.
Uh-huh.
When we sold our house, I think we probably got a premium because of the solar roof.
Uh-huh.
And the premium was probably about the cost of buying a solar roof today. We paid a lot for it because we were one of the first people, but I think getting that same solar roof today would probably be so you probably would get a premium of at least the amount of money you spent on it if you had to sell the house. I don't know. And then if you get on both your garage and your house, at least it matches.
Yeah, yeah, definitely. Yeah, I just want to make sure that whatever I do, that they don't cause any leaks or any, unnecessary damage or
Yeah.
holes. Like that would just be a headache.
Yeah.
Yeah,
Yeah. Hopefully they ironed out all the kinks. We had a little bit of an issue the first time we got one, but they fixed
they
it pretty
fixed.
quickly. Yeah.
Yeah,
Yeah.
yeah. Yeah, sounds good. One other question here from Kevin on Twitter says, what has Emmett been doing in his free time? Yeah, anything you've been up to?
Yeah. I mean, I've been trying to spend more time with my
Hmm.
kids doing things. My wife trying to spend time with her and um, I got this home gym in my garage, just some free weights, like some bars, and trying to get back into working out because I hadn't really worked out with any weights or anything in like a year.
Yeah.
So now I'm trying to get back into that. And I got this cool little like sauna. It's like it costs a few $1,000, and you can get this sauna
Hmm.
and a dry sauna, and it goes up to like 190 degrees. And I go in there and get really like after a workout or something,
Yeah.
and you get for like 20 minutes, so it's unbearable. You're like sweating like crazy, and then I jump into a cold shower right after it, and I do that like now almost probably like 5 or 6 days a week. And
Wow.
I do it right before my kids get home from school because
Yeah.
that's when they're the crankiest and I have to be in the best mindset myself. So I do it, and then I'm like nothing will bother me. I can just like take whatever they have to give me. Any screaming, yelling, I can just handle it and not, you know. But it's like makes me invincible for a few hours after I do that. I feel great. So that's what I've been trying to focus on my own health, I guess, is what I'm saying. Just optimize things.
Yeah, I hear there's decent health benefits, right, with those dry saunas.
Yeah,
Yeah.
feels like it. I mean, a lot of people talk about it,
Mm.
like activating heat proteins or
Yeah.
something. I've listened to a lot of these
Uh-huh.
doctors on various podcasts that really advocate for it. And
Yeah.
I guess some people do the infrared saunas too that don't go as hot. They're like 140 or 150 degrees, and
Hmm.
infrared light supposedly heats you from the inside out, or there's some health benefits. But I opted for the
Yeah.
traditional like Swedish dry sauna
That's cool.
thing.
Where did you get your sauna from?
A company called Finleo, Finnleo.
Hmm. Okay.
Yeah, and they can design. They work with suppliers or so in your area wherever you are, there's probably like a Finleo dealer that sells saunas, and they can help you design it, and you have to get a carpenter or you build it yourself. When they send you all the parts after you design it.
Yeah. Yeah.
Yeah. Have you done any kind of stuff like that? What do you do in your free time, Dave? What have you been up to?
Yeah. Where I'm trying to go RV camping for about a week on Thursday. So I batch recorded some videos, so I'll release them and just hit the road for a week, kind of visit some Texas state parks and stuff. Our kids are dying to camp. They just love it. I mean,
That's awesome.
they're always asking, when are we going RV camping? And
Yeah.
yeah, so it should be fun. And then also planning our summer kind of travel plans. Yeah, probably be on the road. It's one of the cool things like I appreciate just about kind of not being tied down, is the ability to just go places and do things, and so I really want to take advantage of that for my kids and stuff. So we'll see, and then yeah, hopefully, man, this yeah, I'm needing to after our last summer RV trip. I think just being like on the road, I'm much more active. We're hiking every day. We're in the outdoors in the wilderness and making campfires, doing stuff. But then being more stationary since about October or so, it's kind of like a different. It kind of like messes up my I guess my uh, my patterns or my habits, and so
Your homeostasis or
yeah,
whatever.
so
Yeah.
yeah, I just actually tomorrow I'm getting actually delivered a kind of a home fitness gym to kind of like,
Nice.
yeah, just to get something done. But I'm thinking
Yeah.
I might need to actually pick up some running or something. I think I need something just to get my body just, I don't know. I think when I'm on the road, I don't feel that need because we're just
Mhm.
walking 3 or 4 miles a day, in the wilderness,
Yeah.
whatever.
Yeah. Yeah. Yeah.
But it just the stationary life of the modern day person is just it just doesn't match with health.
What we're designed
Yeah,
for.
and then
Yeah.
you
Our
have to
bodies are evolved to do certain things, and we're doing something very different these
yeah, and
days.
then you
Yeah.
have to artificially create this strenuous activity that you don't really
Stress on your
yeah, that you
body
don't
to
really want to do,
match.
and
Yeah.
the
Yeah.
benefit isn't immediate, right? It's just you're
Yeah.
forced to do it, right? Versus like if you're
Yeah.
hiking in some awesome trail and after a
And
five
you
mile
enjoy it.
hike, you're
Yeah.
like, oh my gosh, this is the best thing ever, right? But
Yeah.
yeah, with
Yeah.
modern day lifestyle and exercise is a tough one. Yeah.
Yeah, yeah. One thing I don't know if you have do you have you tried the Oculus Rift, the Facebook Oculus Rift? Have you tried it?
I think I did. Um, I went to Best Buy once, and yeah,
Okay.
I did a demo. Yeah,
Okay.
I haven't
Yeah,
used
I
it at
mean,
length though. Yeah,
I've had one for a while.
yeah,
I've tried a bunch of different things early on, but a lot of things give me like headaches
yeah.
and I don't really use it for much, but I do use it sometimes for this one thing they have called Beat Saber.
Hmm.
And it's like a really good like cardio workout that's like fun, when you do it on like
Yeah,
the expert level and stuff, but it's actually fun. Like it's all different types of music. You're like doing like this upper body kind of, it's actually like a fun cardio if you're like inside even. You don't have to go outside for it. It's pretty interesting way to get a workout if you're looking for something different.
yeah, yeah. All right, Emmett, thanks for chatting and sharing your thoughts.
Yeah,
And yeah, we'll do it again.
absolutely.
And
All right, Dave. Good
yeah,
chatting.
okay, we'll talk to you later. Bye.
All right, bye.